The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another action-packed adventure on the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? The things that are really interesting me, of course, are the S&P up at these high levels. We just broke to some new highs and didn't last there very long. For options expiration, this is kind of the pinnacle of the week. It is not uncommon to see a high made today, a pullback tomorrow, and then maybe matching the high of today on Friday. Now, it's going to be a 3-day weekend. And what you normally, I'd say 80% of the time, if you're bullish, what you don't want to see is light volume pushes all the way up to the top. Well, at least today we don't have that, which is about a little under 2.4 billion shares. We had a ton of volume early in the day. It's kind of dropped off in the last couple of hours as we pushed to these highs. We had a little sell-off try back to 2340 that didn't stick. A huge move down in the dollar after a huge spike. But this really just takes us back to the 14th, to yesterday. So it's not like we're back through a lot of these. The dollar index now printing off at 101.17. So we'll see how that plays out. But still solidly in this 100 range. I thought it would get up to 102 before it pulled back a little bit. We got to, what, to 101.74 before the floodgates of the Treasury opened, and they just hosed it down with some wonderful dollar bills. But a lot of people wanting to repeatedly go short the dollar on every pop out here. I suspect that is the wrong side to be on, that people are going to need more and more dollars. A wild market, so I wouldn't predict the next 5 minutes, but my guess is that in the next couple of weeks, we're going to see this solidly back playing around the 102 to 104.5 range, and all they're doing is slowing down the inevitable as the dollar continues to really want to go back into that upper trading range for a lot of reasons, at least in my opinion. What else do we have going on out here? Well, as we said, kind of a push up here. We got a 3-day weekend coming. If we don't have the most bullish thing you could see if you are and want to be bullish would be a light volume pullback into Friday. That would most likely start here in the next couple of minutes. So you want to watch how all this works out. Of course, the most bearish thing would be a no volume push all the way into Friday's close. That is, of course, expiration. Figure that you got Tuesday and Wednesday for options rollover. And that kind of puts you into, if you can't get the market to crack today, probably the next opportunity for at least short or medium term high would be next Wednesday. So we're basically a week away if we can't get the crack today. I've been thinking we'd just pull back on light volume and then maybe get the next run up. That we've just continued going higher and higher makes me think that there is lower and lower in our future. As always, we like to start off the show with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1966, gunslinging fund manager Gerald Desai opens up a Manhattan fund, hoping to raise just $25 million. Frenzied investors whipped up by his almost 50% return the year before at Fidelity Capital pour $247 million into the Manhattan Fund before it even opens. In 1967, Manhattan gains 39%, then goes on to lose a disastrous 76.3% by the end of 1974. As always, the people who chase the hottest returns are the ones who get burned the most. As we talked, was it yesterday or Monday? I talked about over the weekend, probably was Monday then, about me going to a statistics professor that made a very big case for the Super Bowl just being a reversion to the mean by the end of the game. Any kind of long-term technical study of statistics and the stock market would say that 95% of the time what we have is mean reversion. The question is, when do you get that reversion and how nasty does it get? But any kind of long-term move out there would suggest a reversion to the mean. We have not had one in 6 or 7 years of any kind of significance, and that is always a troubling thing, at least to me, especially when you're up at astronomical levels of price earnings multiples, price to book, and at the same time, people only say the market can go higher. That is always one of the riskiest things to see out there. You can give me an email at path@tfnn.com. You can call me at 877-927-6648, and you can put a message in the den. Oh, that's actually true. One of the gentlemen in the den said this guy ultimately got rich building a financial conglomerate. But we must move on. After the bell tonight, we've got Annaly Capital Management, Applied Materials, CBS, Chemours, Cisco Systems, GoDaddy, NetApp, Oil States International, Stircycle, and Trip Advisors. So I don't think maybe Cisco could move the market a little bit, but my guess is that thing is up or down 15 cents. I just don't see any surprise coming out of that one at all. I don't think that there's anything else really out here that could change the market. So kind of looking at that. Again, some of the other things that are probably most important to me are the TLT. Was going to wonder whether this thing could go down and break the low of day at 118.65, got to about 118.69 and bounced to 118.85. Still off 66 cents. I'm still looking, I guess we can pop up a chart. Still looking for this 116 level to be tested. I see nothing out here that says that you find a bottom in the bond market or any other market. We had plenty of volume yesterday as we went down with 13.2 million shares into the previous low of 11.1 million shares. So we've already had enough money, enough volume back into this other one to suggest it. We also have had a huge energy move from the 122.27 high out here, and that just tells me that the odds of hitting 116.80, the December 16th low, are about 85%. So not thinking that there's any way out of that 116.80. And at that point, do we even break that, which causes a bigger problem that I will talk about when we return triumphantly on the other side of this commercial break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, as I said, a lot of things I'm looking at here. We're probably going to get some fairly decent signals in the next, 24 hours. One would be a third lower high in gold since last Friday. And, could we break through that in the next couple hours or even tonight? The answer is yes. That would give you a good signal. The downside would be also a move lower in gold back here to maybe even a lower low than we saw earlier in the morning at about 1220. That would give you at least a little bit. A rejection of this hammer that we had not too long after Janet Yellen started today. I didn't catch what everybody was saying the news was on it. Kind of just the opposite of what we had yesterday when they didn't like what she had to say. But I didn't see a lot of correlation to that. We do have at least, I think it went from 27% yesterday to over 50% today for a March rate hike. We also had another Fed member come out and say that he is more than willing for 3 rate hikes and sooner rather than later. Again, that kind of put the kibosh on any kind of move higher on the TLT, at least in the very short term. But to me, it's hard for me to make a case that the TLT is not in a bear market, and whether or not this 116.80 holds temporarily, I suspect that it could break in the coming weeks. Again, just so much energy off this 122.27. The retrace of the one before, no test of the 116.80 before it happened. But the last 2 times we've had massive selling coming off the January 12th high back down to the 118.32, and this 122.27 move out here had huge energy on the way back down to what we had today. Now we've got a little doji out here forming today. I would not be surprised to see that as the halfway move down in this move. So if you've got to figure $4 up, $4 down, that would take you to about 114. And I would not be surprised to see that if it gets down to the 116.80 here, maybe the first couple of days of next week. Maybe a little bond buying going into the weekend as the safety trade, but that is about it. What else do we have going on out here? We went higher, 23, 47, 29. Did we go any higher than that? I actually need to refresh that real quick. Yeah, 23, 47, 35 as the high of the day on the S&P cash. It didn't go any higher. It's pulled back in just underneath pretty much the high of the day before this last little run. And volume continues to be rather brisk at 2.45, 2.46 billion shares. We may be getting a lot of people getting everything done before they leave for an extended 3-day weekend. So we may keep an eye on that. We'll go to some of the stocks that are moving today. FOSL, one of those out here that gapped down and gapped away through all the previous lows. Again, this company makes a lot of the like swatches and everything else for Swiss-made watches. Those watches, of course, can't even sell the iWatch, much less anything else, or the Apple Watch, whatever they call it these days. Was very interesting to see everybody say how the iWatch was a rounding success. The problem is it didn't have any margins, still doesn't have any margins, and still sells about $5 million a quarter, which is less than the tablet, but on a fourth of the gross profit. So I guess it's all relative. And again, Apple's biggest problem is not selling what it's got. It's that its big claim to fame was the equivalent of coming out with Citizen Kane as your first big movie. The only way down from here is lower. You're probably not making a better movie than Citizen Kane. So what do? You're young, 32, you make Citizen Kane, and it's all downhill from there. I think you kind of want to slowly move up to that level. You don't want to just start off with the greatest movie ever made. I think that's kind of the tough part. My cousin Penny. The Utes. Anyway, down on huge volume is the Fossil Group. Groupon, again, all these stocks that are the living dead, GRPN. We've had Sears bounce. We've had now Groupon bounce. Is anything different in these companies? No, just way too many shorts sitting on it. And again, any kind of even kind of like when you put or I guess they actually put mirrors to people's faces to see if they can see a little steam on the mirror to see whether people were dead or not. I don't know why they didn't think that they could just put their fingers on the side of their neck and see whether there was a pulse. But they didn't like doing that. I think a lot of those people were very sick. Doctors really didn't want to get that close to their patients back then. They might die too. A lot of volume back up here. This thing's just going back up to $5. But again, the living dead, these stocks like Sears, Groupon, just going to stumble around, maybe get bought out, maybe not. Who knows? But I don't see a lot out here for either buying the lows or doing anything else. If I had somehow bought Groupon down at the lows, it popped up here, I'd be looking to sell it right when it closes $5. The only decent thing is you got more volume up than the 27th of October when this thing cratered and went back down to this 327 low of January 30th. But little volume yesterday, a lot of volume today. And again, these things are massively short because they just assume that eventually these companies are going out of business and they'll take their 100%, even if it takes a couple of years for these things to waddle away and down. What else do we have? AIG came out with numbers and missed. This is fairly interesting to me. Down with monstrous volume. Looks to me like 5706, which is the November 3rd low, is the next target on this one. It may play around. It may take a couple of weeks or a month to get back down here, but my guess is 5750 is a good target for AIG. That tells you a little bit about the trading profits that these guys get from trading their less than volatile stocks, and that hasn't been good. The only ones that have been good have been the big cap, big name stocks. Now, why did my little thing go away here? I had my clock up and it went away. I'm not exactly sure why. I will bring it back up. I must be clicking on things and not even thinking about it. Again, you can give me a call at 877-927-6648. Other stocks of interest, soda, nice bounce up here. Of course, what you want to worry about is this thing comes back down and opens at 46 or 47 bucks tomorrow. That would be an abandoned baby. No sign that this is going to do it right at the moment. But this thing has had a tremendous run off of absolutely being creamed. I still don't understand how this company's making the kind of money that's being reported. I just don't see the anecdotal inference in the stores of this being a big seller.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're playing around at 2346 on the S&P cash volume, 2.515 billion shares. We'll see how the end of the day comes out. But if this thing doesn't really probably crater in the next 30 or 45 minutes, my guess is that you are probably going to see the market just kind of tick up all the way up into Friday's close. And that will set up quite a opportunity for the market come Tuesday or Wednesday to tell you whether or not that thing can hold up or if it will fall like a souffle. Other stocks of interest, we got that. Lending Club. We talked about this one before, yesterday actually. I said, if this thing wasn't a $7 stock, I would have been short all over it. This came back, filled the gap, did so on much lighter volume, and pretty much the perfect type of short or signal to get out and sell before the curtain comes down. This one, just a myriad of horrible things going on. The energy on this last leg from December 16th was nothing. And, I don't short $6.80 stocks, but one of the worst looking patterns out here, I guess, is this does go back to the $3.44 low. What else do we have? That's kind of the big ones at the moment. We'll go back and look at some of the other ones that have maybe made some decent signals. Wanted to see how Blue did, Bluebird Bio. Again, I think someone asked me about biotechs yesterday. Can these things still kind of creep up over the next couple of days and maybe into Tuesday? I probably think that there's a better opportunity come next Tuesday. But again, one of the weaker ones out here is this Bluebird Bio. It's back in to a significant gap. Volume is incredibly tepid. Yesterday, 800,000 shares. Today, just 370,000 compared to December 6th high that had 2.26 million shares. So very, very light volume as some of these are coming up here. Cerners, we were talking about maybe 55, 56, where this one may be a similar pattern to Lending Club, just not as bad. I'm not saying, but pretty decent slam down back on the 2nd of November. It comes back up with little volume comparatively, 12.3 million shares on that gap down to 4.69 on this, even 2.5 million shares today. He had 4.7 million shares yesterday, but fairly light volume. Maybe this thing fills all the gap. Again, I'm not really going to be pushing shorts out here unless this market decided to roll over before the end of the day, and really not getting any kind of signals like that. What else do we have out here? ICLR, which is Icon, ICLR, back into the trading range of October 21st's high, $85.74, 1.5 million shares into it with 600,000 shares, and that's about it. IEMG, which is the emerging markets, back up right to the double gap. I don't know if it gets any better than this, but making no signs that this thing wants to pull back at the moment. LifePoint Hospitals, wanted to see how this one filled this giant gap down that goes back to the 29th of July of last year. 3 million shares down, 380,000 today. So again, filling some of these gaps with light volume, and we'll point out as many of these as we can. Live Nation, one of the day traders, very light volume as it comes back in it to its November 14th high at $29.04, 2.85 million shares. And 1.38 million shares, not pulling back off this very much. Be off the December 19th low is pitiful. Merck, another one up here testing its highs. You've got to look at the 17.8 million share high of November 10th, 64.96. 18 million shares about into it with 10 million shares yesterday, 12 million shares today. And kind of rolling back into the trading range. A lot of these are just not going to have the energy, even if they hold up here for the next couple of days into the 3-day weekend. Mueller Water Products, been watching this one to see whether or not there's any way to buy this thing back at about $12.25. Hadn't quite gotten there. Nice kind of low volume day out here today, so you need to wait for the couple more days on that. Ollie's Bargain Outlet Holdings. Don't know about this one. Up against its December 7th, a day that will live in infamy, $32.75, 1.38 million shares into 800,000 shares on the 14th. So fairly light volume, still stuck in the trading range. PRL Health Sciences. This one's up against its November 9th high of 900,000 shares with 185,000 shares today, 380,000 shares yesterday. So a lot of these very tired, very tired. So we'll keep an eye on that. Okay, what else do we have out here? SBA Communications filling its gap. I think we talked about this one a little bit yesterday. Pretty much has done what it should. You would like to see a retest of 95.66 on a lower volume if you want to be long this one. Don't know enough about it to say pull the trigger, but if you were long, I certainly would be ringing the register, as they say. Waters Corporation, we talked about this one coming into it. It's gone through its double gap. Now it's up about halfway without any kind of energy. So watch this one very closely in the next few days. WAT is the symbol. Gap down on October 25th with 3.2 million shares and into it with nothing. Weyerhaeuser. Now this one wanted to see, it had the volume, but really didn't have the action of a breakout of the previous high. December 13th had just under 6 million shares. He had 7 million shares on the 13th, and this thing is kind of hanging right out at that high. My guess is that this may be the last swan song for housing-related stocks into new construction, but keep an eye on it. We had United States Steel, who, of course, Hyman Roth told us that the mob was bigger than these folks, if you know your godfather. We've got Rich from Oregon. How you doing, Rich?
Oh, fine. Thanks again, Dave, for taking my call.
I don't know how long you've been on there. I'm on a roll. Go ahead.
Well, that's okay. I don't want to interfere with genius speaking.
I don't know how you could do that. Anyway, what are you looking at out here?
Well, I've called you before on TTMI, and they had earnings yesterday, and they beat for what that's worth.
Right.
Now, the stock action I'm looking at is today kind of just flattening out, but the volume seems to be holding up. What do you see, if anything, for a future, or should I leave?
Well, what you should do is wait until we come back on the opposite side of this very short but wonderful commercial timeout. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back with Rich in Oregon, looking at TTMI. Kind of interesting pattern. But I think what you need to do is look at the close today. If the S&P closes at the high, most likely all we're going to do is tick up a few more points into Friday's close. And the question is, if you could get $18 out of this, would you still hold it if you had to hold it to Friday?
Sure.
What if the odds were 50-50?
Ouch.
Okay. That's all I can say is that
I've squeezed it enough.
No, I'm just going to say that there's a great example in Fooled by Randomness from Nassim Taleb about expectations.
Yes.
And, you know, you get an average woman in the United States to about 78, then actually she's got a little bit more to go because if she's gotten through that 78-year-old level, then most likely she's going to go a little bit farther because of statistics. There's a lot of bumps where kids died when they were infants, and kids died when they were drinking and driving. And if they get to the point where they're like 78, at least a female, you can pretty much bet they're going to make it to 86. So there's always that kind of upside once you hit a higher level. You can expect a little bit more. But then the chances of them making it past 86, or an average woman in the United States, drops off amazingly. So if you're going to place a bet, you probably don't place that bet until she's close to 86, right?
Okay.
And the problem is you got your 78, you got your 86. Now you're starting to bet, is she going to make it to 92 and then 94 and then 95? And then, at some point you could say at 114, you're betting on whether she lives the next 5 minutes. And that's the problem, right? You're always kind of doubling up. I'm just wondering if you think 50 cents is really worth the risk if it was 75% chance of higher. I'm just trying to figure your risk reward tolerance out here, because I think maybe this thing could close at $18 on Friday, and I'm probably thinking that that's probably true. You could also gap down tomorrow, 1675.
Wow.
So now, if it were me, you got a no volume gap down today, not much of one, right?
Right.
You got the markets trying to hold at the highs. I would probably wait till the last 5 minutes of this day. If the markets, this is one of these markets where I would not be surprised any day to wake up and see the S&P cash down 40 points or 50 points. I wouldn't be surprised.
That's a substantial drop.
Huh?
That's a pretty good substantial drop in today's.
Yeah. Everybody's long. There aren't very many people short. If there were a lot of people short, we'd be up 20 or 30 points in the S&P cash, right? All it's doing is a little rolling action. In the morning, people short. In the afternoon, they cover. And that kind of moves the market up a little bit every day. But the biggest problem you have if you want to be short is you're running out of time into the weekend. Not a lot of people are they're going to sit, okay, well, the market's at highs. Is there any way I'm going to sell into this weekend? The answer is generally no. And so maybe that dip comes next week. But any kind of correction after the kind of move we've had up, which is just the slow plotting thing, tends to be rather violent. So I'm always kind of worried, not just for tomorrow, but for the week to come. But the setup is pretty much, there's a lot of blow-off tops. So I'm kind of thinking that, you've got a really good trade out here. If you're looking at a woman you bet on living to be 78, and she's made it to 86, are you really ready for the next bet higher?
Probably not in this market.
I think it's a coin flip. That's the real problem. But again, if it dropped $1 or went up $0.25, is kind of the bet you're making here now. Maybe up 50 cents, down $1. And you're the only one that can really answer that question. And it's 75%, 50 cents higher, and 25% is $1 lower.
Mm-hmm.
So to me, I was trying to think of this during the break. It's just like, it's a very tough coin flip out here. You're in it at $13.50. Pretty nice trade. It's hard to say that the market's really run into Friday anything more than a little bit more short covering. Chances are, mostly, that you're going to make a little bit more or a little less chance of pulling back, $1. I think I said give this thing 3 days.
Yes.
Is this the third day?
Yes, that's what I called today.
Okay. You should, to me, it's 6 and 1, a half dozen the other. I don't take coin flips. I'd sell.
All right. Well, I appreciate it.
Okay. Yeah,
Thank you, Dave.
This is a tough decision because it's not an easy one either way, because most likely it will be a little higher tomorrow. But you also have maybe a 25% chance of giving back $1 on it. And that's normally, I just don't take bets. Once you get past a fairly decent level, maybe you get one more pop and then you go, okay, I'll take care of it. I would much rather own this thing at $15.75 on light volume.
Okay.
Okay? Good enough. Thanks for the call.
All right, David. Thank you.
You bet. You can be like our friend Rich from Oregon and call me at 877-927-6648. This is one of the few stocks that I really liked when he called in at $13.50. And I held it to $15. He held it through earnings. But what can you say? I think I sold it at $15.20 or something. I don't do many on-air buys, but that was one that looked very tasty. What else is going on out here? Oh, we were looking at different stocks. We were talking about U.S. Steel, I think, when I saw that. Again, fairly light volume back into the trading range. There's a ton of stocks that are out here that are right at these highs with light volume. Does that mean that you can't buy Apple and run it up another $1 and move the indexes up just a little higher? I think the answer is you could. I still think that anywhere along the line since we went above 2,300, if we wanted to be out of trouble, we needed a day with about 5 billion shares on the NYSE, and we never got it. And that's always made me think that the market has some systemic risk that is not being put in by looking at some of the other things that should be in the market. But we shall persevere. Let's take a look at some of these others. Oh, we're going to break. We'll be back. Give me a call, 877-927-6648. Email me at path@tfnn.com or put a message in the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, of course, William Buffett is rather famous for saying, if you want to get $1 billion, start with $2 billion and buy an airline. He's hated them. He's also said the only stock that you shouldn't buy is a tech stock. Now he owns Apple. Bought a ton of that. But I think he bought just a ton of a bunch of airlines, or at least his company has. A lot of people are speculating this is the new wave of people that will replace him when he goes to the great stock exchange in the sky, or at least retires, but I don't think he will. And that's it. So you had a lot of these airline stocks bouncing this morning. Take a quick look at that. American Airlines up a little bit, got to 48.05, not a lot of juice. Of course, he's already bought these, so I don't know how it really changes a lot other than people following them and maybe people who think that they should have been short these airlines. Anyway, nice pop in Delta Airlines that got to $51.96, but gave a bunch of that back. Love Airlines, another one. These things are not anywhere at their highs. Volume's a little bit better. 7.7 million shares on Love as this thing gaps up a little bit. Procter & Gamble, one of the few ones gapping up on one of the big men of the street going after it. You know, you wanted about 75 million shares. You got about 20 million shares breaking through this $90 level to 91.10 today. And the last one out here is United Continental Holdings. This one's kind of getting back up to its previous December 15th. Still, 50 cents short. And but it does have the volume. So that one looks like that is a possibility of a breakout in the coming weeks. Just kind of tough to see how that actually does anything. Let's see. Okay, what do we have going on? Oh, let's take a look at the decline or the gap downs for the day. See if there's anything. We already hit AIG. AstraZeneca, little gap down out here. Never made it to this gap, which is, I think, what we talked about at 31.5. You probably think that that one would have gone to. This one just gapped down, but not much volume, just literally closing the gap that happened on the 9th on lighter volume, so not looking bad. BP coming out here and filling this gap up of the 30th of November that had almost 12 million shares with about 6 million shares. So I dislike the energy came down a little stronger than it should have. So I would probably pass on this one. This gap may not hold. $32.53 is the next one lower. And that's probably where I would look at this. I don't like the risk reward out here. I do like the light volume today. This thing may mess around, but my guess is this thing could come down another buck and change back into this lower one, and that would be a much safer trade. Duke Energy, another gap down today on lighter volume. So some of these, we talked about how energy looks so good, I think on Monday, but I was waiting for one more pullback here in a lot of these. Lending Club, we talked about that one already, and Merck, which I don't think we have talked about today. Looking at this one again, November 10th high, $64.96. Got into it with 12 million shares. So that's today. So you're probably going to be a little light for Merck busting this November 10th high. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.